I just got another payout trading my Virgin Wick theory model, and in this video I'm going to break down exactly how I got it, what strategy I used, the trades I took, and my approach to prop firm risk management. So here it is, the $1,000 payout I just got. Just to prove that the first one was not pure luck, this is the exact same model, exact same process, playing out over and over again, day in, day out. So let me show you exactly what I did to get this $1,000 payout process. Here's the email, 10th of March. Before I get into the model, I just want to quickly touch on risk management and my approach to prop firms specifically, because even with a profitable strategy, if you don't play the prop firm game properly, you're not going to make it. So for the challenge phase, I am more aggressive. I risk 25% of the max drawdown, so that gives me 4 losers in a row, and then I'm done. Just because I want to be more aggressive. I don't want to waste too much time on the challenge. The goal is to pass fast, not survive forever. Surviving is more for the funded account. Because if you lose a challenge, you just buy another one. Like, it is what it is. You just don't want to waste too much time on it. So I found 25% is a good balance between speed and win rate if you are only taking A+ setups. So yeah, quickly win the challenge or fail, and then once we get to the funded account, we risk a 10% of the available drawdown. So if you have $2,000 of drawdown, starting drawdown, then you risk $200 per trade. And yeah, it's a bit more conservative, it's a bit more slower, but that gives you time for and sample size for your edge to play out, so you can actually build up the profits and build towards the payout. But I'm not going to go too deep into that whole risk framework. I actually have a full video going over how the math works, why this is optimal, and why I choose to manage my prop firms this way. But you can check that out after this video. So here's the model or the strategy that I'm trading and that I teach in my Discord. So this is Virgin Wick theory. Let's go over a bullish example of the setup. So big picture, it is essentially just a break, retest, and continuation strategy. So we're breaking a key level, retesting it, and then we are continuing up. So the key level is created by a Virgin Wick. So a Virgin Wick is any wick that has not been touched before. So imagine this candle was not here. This wick would be a Virgin Wick. Same with this one down here. Now, once that Virgin Wick gets closed through by a Chad candle, that level then becomes your bullish point of interest, and you can mark that off. Then in the next hour, we can drop down to the 1 minute time frame, wait for price to trade into and below that point of interest we just marked off. Then we want to see it tap into higher time frame fair value gaps. Then we take a 1 minute change in state of delivery to the upside, or a 1 minute inverse fair value gap to the upside. Some other considerations with this is we also want to trade within the kill zone. So whether that's Asia kill zone, London kill zone, New York kill zone, either one is fine. We also want the point of interest, so this level, to be unused, meaning ideally price just trades into it and then we get a reversal off it, as opposed to price trades into it, then we bounce up, come down, up and down, and then you get an entry. That's just not what you want to see. You want to wait at least 10 minutes after this point of interest has been created. So after this hour starts, wait at least 10 minutes. I've just found from my testing, and other people have found from their testing, that the first 10 minutes is lower probability. And then next, we want to make sure we have a clear drawn liquidity. So here is our drawn liquidity. Otherwise, I would not want to take it. And then lastly, just some form of higher time frame bias. You can use higher time frame fair value gaps. You can use the point of interest on a higher time frame, like a 4-hour point of interest, or you can use a higher time frame change in state of delivery. It's up to you. Different people find success using different methods. It's about finding one that works for you. I personally like using CISDs on a high time frame to see my bias. But yeah, that's the model in a nutshell. I also have a free PDF linked below every video, which you can click on and study in your own time. So I recommend you look at that if this is at all confusing. But with that out of the way, I will go through the trades that got me this payout now. All right, so this is the final trade that sealed it. This was yesterday during London, 3 a.m.-ish. Let me just turn everything off so it's cleaner. All right, so at 2 a.m., start of London session, this is 10th of March, we had a bullish point of interest created by our indicator. As you can see, if I go on the 1 hour, we had this 1 a.m. candle close through this Virgin Wick, creating that point of interest. But I do not need to mark that off manually because our CCT indicator does it for me. So there's our bullish point of interest. Let's see if it gets engaged. Nothing yet. Still waiting, still waiting, still waiting. We came close, but nothing yet. Bang, okay, POI gets engaged. That is step 1. Step 2, did we tap into high time frame FEGs? Yes, we tapped into a shitload. So looking very bullish here. That is exactly what we want to see. With like 0 bearish POIs, all the way up there. Okay, that's perfect. And then step 3 is simply our entry model. So either a change in state of delivery or an inverse fair value gap. So let's see if we get either of those. And bang, right there. We get, let me turn this off so it's cleaner. Okay. So we actually get an inverse fair value gap confirmed here on this candle. And then there was also a change in state of delivery on the very next candle. So I entered in here, put my stop down here. Normally I might put it around here, but I felt like there was so much room to move up, so I could be a bit more lenient with my stop loss, give it some breathing room. The CISD multi-time frame indicator is mostly pointing up as well, so everything is looking A+ primed to the upside. This is like a perfect setup, exactly what we want to see. And then we eventually get 2R. Very nice. Yeah, so this was the one that sealed it. Very nice trade yesterday. But I'll also go over some other trades that built up to this payout throughout the last few days. All right, so here's another super nice trade. Where are we? Here we go. So this is on gold, Thursday, Asia session. We have a bunch of bullish points of interest to work with, as you can see here. So let's see if they get engaged. First one gets engaged. Do we tap into high time frame FEGs? Yes, those are 5 minute. And we actually get a SysD here, but the reason why I would not take this one is, firstly, it's a single candle, pretty small candle, change in state of delivery. So not the strongest, pretty weak SysD in my opinion. And also it's within the first 10 minutes of the hour after these POIs were created. And I found in my testing that is significantly lower win rate. So we would skip this setup for good reason. And as you can see, it just chops around and you would have gotten stopped out. But then we actually do get another setup. So here, there is an inverse fair value gap. Bang, right there. So I entered in here. Oh wait, no, there. Yeah, right about there. And since my drawn liquidity is all the way up here, let me just turn off the FEGs. We have so much room to go up. I figured I could give a bit of breathing room to my stop loss, since we're quite close to it anyways. So I figured we could put it down here and then just aim for 2R. And that still gives us plenty of breathing room on both sides. So let's see this one play out. Chops around for a bit, but good thing we have a pretty wide stop loss, so we never get tagged out. And then eventually it goes up and even takes the draw on liquidity, I believe. No, it doesn't. But yeah, that was a super nice win. Can't complain about that. All right, so here's another super nice trade that led to the payout. This one's on NQ this time. So, all right, let me turn everything off. We'll start fresh. Okay, so we have a bullish point of interest to work with. Let's see if it gets engaged. It does get engaged, but it's very early on. So let's wait at least 10 minutes and then see. Okay, so after 10 minutes, we can begin to look for an entry. So we sweep these lows further into actually this POI from the previous hour as well. So that's exactly what we want to see. Next, we want to see some high time frame FEGs tapped. Okay, down here, perfect, very nice. We also sweep this other POI as well, so that's very nice. So now we just need an inverse fair value gap or a change in the state of delivery. And bang, there you go. I will just turn this off so it's a bit cleaner. So upon this candle closing, we have a confirmed inverse fair value gap, so I enter in right there. Stop, you could put it all the way down there, but you don't really need to. It's pretty far away, and just on the other side of the inverse fair value gap is safe enough. And that still allows us to get to our, while targeting these highs, with a bit of breathing room on each side. It's a bit discretionary, but after a few trades, you will get a feel for where you should put your stops and your take profits. But I did something like that. And yeah, I like entering in immediately after the IFEG is confirmed. And then we let that play out. Chops around for a few minutes and then bang, straight to TP. Super clean trade, really nice. Even the CISD multi-time frame trend is pointing up on 3 out of 4 time frames. So A+ in my books. Super nice, super nice. All right, we'll go through one more of the trades that led to this payout. This is a pretty nice example. So, okay, let's go to the start of the hour, 9 p.m. on Wednesday. This is still an NQ. We have this bearish point of interest here to work with, bearish point of interest here and here, and we have a 5-minute FEG here. So let's allow the first 10 minutes to pass, as always, and then we'll start looking. All right. So POI gets engaged, but we have not engaged any of these FEGs yet. So even if we get step 3 now, we have skipped step 2. So we cannot take the entry, even if we get an inverse fair value gap or a change in state of delivery. Because, let me just turn that off. Yeah, so we get a bunch of CISDs here, but as you can see, they amount to nothing because we didn't tap these high time frame FEGs. So these are really important. So I was still waiting. We then created a 5-minute FEG with time. But I would still like to see us sweep these prior highs into these other FEGs and then get an entry model. So still nothing yet. Okay, bang, we finally took out this high. And we finally tapped into these 30-minute, 10-minute FEGs. So now, just looking for an entry model. And it should be right there, bang, okay. So here is your change in state of delivery. I'll just turn the indicator off. Because, what is the last swing high that got swept? There is the last swing high that got swept. It got swept by this leg. So you want to look at the highest up closing candle in this leg, which is this one. And it is consecutive with this one. So the opening price is your change in state of delivery level. I won't turn this into a CISD tutorial video, but if that is confusing to you, just watch. I have a CISD video, but you can also watch a million other videos on how to draw a CISD. Yeah, so here is where you'd enter your short. Stop at these highs. You can even just go these highs here. I feel like that's safe enough. You don't need to go all the way there. And targeting 2R. And chops around for a bit, but yeah, bang, eventually goes to TP. Really far down. So yeah, super nice trade. All right, so that's how I've been able to get payouts consistently using Virgin Wick theory. The model is working not only for me, but plenty of other people in our community are crushing it as well. You can join the free Discord if you want to trade with us. If not, that's fine. And if you want to run this on Lucid Trading like I am, there is a 50% discount code, which I will link below. And if you haven't already, I would recommend watching the risk management video before you consider buying a prop firm. All right, I hope you like that one. See you next time.